These stocks are down 10 to 15% over the past 2 weeks with earnings. So I think there's a bounce. There's a lot of concern about comp into comp, like Jeff talked about. You've got tariffs ahead weighing on the group. So I do think as you get good results, as we hear about good results, you'll see a bounce. But as you look to 2019, it looks awfully late cycle, and we invest in change at the margin. So we might comp the comp, but it's not going to be as good as last year, and the margins pressures will persist into 2019.
In what spaces specifically? I mean, a lot of analysts, your contemporaries point to, say, home furnishings, or things that are heavily sourced in China. Is that is that how it's going to work?
Yeah, I think as you look to next year, you're starting to see certain categories slow down. Home furnishings is slowing down. Home Depot and Lowe's are slowing down. Apparel looks very peakish. So as you look forward, you think about a Target who has big exposure in those three categories. Tough. Williams-Sonoma, tough.
Bed
Bath and Beyond. Bed Bath & Beyond, I think the next recession we could be having some serious conversations about what happens with Bed Bath & Beyond. And if tariff comes in, 90% of wood furniture is sourced out of China.
What?
Not good, yes.
Yeah. 90%.
90% of wood furniture.
Gannett indicated during our interview that a lot of their product mix has not yet really been subjected to tariff. That would be coming January 1. Does that become more of a concern? It becomes more of a concern. If you go from 10 to 25%, most vendors are basically supporting the retailers right now. The currency is depreciated. That's a manageable number. You go to 25, there's not a lot you can take out. You can't move sourcing that quickly. And then, when tariffs came in on appliances, 2/3 of appliance demand is because something breaks. Your refrigerator breaks, you need it that day. Something that's so discretionary as furniture, the elasticity of demand is scary.
So give us a name. Who gets hit the hardest if this goes through?
I think anything that touches home furnishing. So Williams-Sonoma, Bed Bath & Beyond, all your furniture retailers.
We have the Ethan Allen CEO on in the next hour. I guess we got a question for him.
You have a good question for him, absolutely.
Man, I had Bed Bath & Beyond. That thing is really.
But Bye Bye Baby is so useful.
It's a $1.8 billion market cap now. I mean, when you just said that about the next recession.
So are we back to Ulta and like Dollar General, or I mean, where can you hide in the space?
To your opening question, I think that they're oversold. You want to stay defensive, but you want to have a barbell and you want to have some risk in the market. So I think on one end of the barbell, Home Depot's a great company. Housing doesn't turn into a pumpkin next year. It's probably the best company I follow, including Walmart. So that's something that's pulled back. I think that gets very interesting. One category that's more risk on, Dick's Sporting Goods and athletic apparel. There's the singular category, besides auto parts, that's actually accelerating at the margin, and it's the inverse of what happened next year. This cold weather, as Jeff talked about, great for selling coats and boots, great for Nike and Under Armour, great for Dick's Sporting Goods.
So what I'm trying to figure out, Chris, is, it's a great economy, so it's sort of like rising tide lifts all boats right now.
Yep.
But all these companies have worked very hard to fight Amazon on their supply chains. They've invested in loyalty programs like Macy's. They've revamped stores. How much of it is some of the improvements that they've been making, and how much is just a healthier U.S. consumer?
Yeah. So if you look at last year, holiday retail sales were up 5.9%. That's the best since 2005. 2005 was an incredible time for the consumer. We're expecting about 3% growth this year, so a pretty big deceleration, which doesn't bode well because we do invest in change at the margin. They're more competitive. If you look at the growth between core retail sales and online only sales, this starting in about April of last year, that has contracted quite a bit. Part of that's the better environment, though. Rising tide, people more flushed, willing to go to the stores, willing to go to the mall. So I would expect into next year that actually widens out, but not to the levels that you saw.
I was fascinated by Gannett's answer on real estate, basically, suggesting that they've reached some kind of equilibrium on brick and mortar to future sales. Is that fair? I mean, is that common that people feel they've closed enough?
I think it depends on the category. There are some categories where, look, if you're in a strip center and you're Best Buy, there are about 900 stores. I think that's the right number. Home Depot, that's the right number. The mall, that's a bigger question. What you've seen is like A and B malls, rents have been very strong. But those C and D malls, I don't think we're done there.
What about tax rate? Was there a real benefit from a lower tax rate for all these retailers that investors realized? And as we start to anniversary it, not that long from now, can we expect less of a response?
I think yes. I think in a couple ways it really benefited retail. You know, number one, you had accelerating wage growth. You had a plethora of companies last year around the time that the tax package was signed that put these one-time bonuses out, and that continued through March. The second way it benefited retailers, it was on their bottom line. So on mostly domestic companies, they got almost 20 points of earnings growth benefit from the tax reform. You get to next year, slowing comps, margins pressures persisting, earnings growth decelerates naturally because that tax is a one-time benefit.
So you don't sound that positive.
No, you know, we want to be a little more stapley. We want to be a little more defensive right now. Pick your points of risk and names where you see things getting better, and that's why we like Dick's in the athletic category.
And Costco and Ulta. Thank you, Chris. Nice to see you.